There's no question that one of the key policy and regulatory challenges that we face today is the decentralization, even some would call the democratization of finance, where central nodes, clearinghouses, and even banks are less and less important for cross-border payments, peer-to-peer transactionality, and settlements. And the regulators, not just in the context of crypto technologies, but also digital payment platforms, are struggling with how to think about regulation in a DeFi world. And that has challenged regulators to date. I think you see regulatory maturity beginning to come to grips with the technology and what this means. And certainly those in the technology and the crypto ecosystem developing capabilities that allow for greater transparency, accountability, traceability in how they operate. And so this is a fundamental challenge because the regulatory system as we've understood it for the last half century, if not more, has been centered around this idea that you can regulate the nodes or the clearinghouses of the financial system. The large major banks, the central banks largely in control within their jurisdictions, key intermediaries or clearinghouses operating, SWIFT being the key bank messaging system around the world. These are all elements of an architecture that rely on degrees of centralization, customers, data, transactions. The more that that's decentralized, the more that payments are disintermediated, the more that you have peer-to-peer transactionality where central institutions, an exchange or a bank are no longer necessary, that does create challenges then for regulatory authorities from a fraud perspective, a systemic risk perspective, and certainly an illicit finance perspective. And again, that's what regulators have been grappling with over the last few years as crypto has evolved, as payment disintermediation has increased, and as we've seen the sense of risk grow as regulators are no longer able to control every element of the financial system. This means there has to be innovation around regulatory structures, around technologies that are applied, as well as the norms and the principles that will be applied. How do we think about transparency, accountability, traceability when you don't have centralized nodes, when you may have disintermediation, where you have tumblers and mixers may be involved, where the originator and beneficiary are not well understood. This screams out for new regulatory structures, more cooperation and collaboration, and certainly the use of new technologies. We've seen this and we continue to work on this here at the firm, certainly with Consilient, which is the first ever firm to apply federated AI or learning in this space, which allows for the sharing of models and insights of where risk sits based on behaviors without ever having to share, aggregate, or move data. That's essential for a disintermediated or a decentralized or a DeFi world where you're no longer going to be able to aggregate all the data you want to analyze and to understand where risk sits. This is necessary. These kinds of innovations are going to be important. And this tension between centralization and decentralization is going to be a core theme in the coming years as we watch the crypto industry come to full fruition.